With Western airlines braced for losses in 2012 because of contagion from the Eurozone crisis, Asian carriers should provide some much-needed cheer for the aviation industry. Asia's developing economies are expecting strong demand for air travel, which should translate into profits for the region's airlines. Furthermore, the rise of China and India as economic powerhouses means Asia is expected to become the single most important sales region for Boeing and Airbus over the next 20 years, worth an estimated $1.5 trillion. At the Singapore Air Show that starts on February the 14th, one of the big talking points is expected to be the deepening global economic slowdown. Air travel is closely tied to gross domestic product, and the International Air Transport Association is expecting Asian carriers to report a combined net profit of $2.1 billion in 2012 compared to $3.3 billion in 2011 because of the downturn. Still, Asia's developing countries, led by China, are on course to record some of the best GDP figures in the world in 2012, and there is massive potential growth in the Chinese aviation market given the country's 1 billion population. Airbus expects China to be the most valuable aircraft market in the world over the next 20 years, taking delivery of 4,400 jets worth $545 billion.
Well, if we look at the economic background, it offers structural growth. And again, if we look at the air transport development, in 2010, 2011, looking at probably 250 million passenger journeys domestically. China is about the same stage as the US was at the start of the jet age. And if we look at that and compare what might happen in China with what happened in the US, then within a generation, within the next 20 or so years, you're looking at that growth to go to 1 billion domestic passenger journeys a year. And that is the opportunity. But China provides only a partial explanation as to why Asian airlines have become the largest part of the backlogs at Boeing and Airbus. Low-cost carriers offering cheap airfares have great growth prospects in Asia, given their market presence is low compared to budget airlines in Europe and the United States. In November, Lion Air, the Indonesian low-cost carrier, announced a preliminary agreement with Boeing that is supposed to be the US manufacturer's largest ever aircraft order. Lion Air plans to buy 230 Boeing 737 aircraft worth $21.7 billion at list prices. Another big talking point at the Singapore Air Show will likely be the deeply troubled Indian aviation market. India's airlines are reeling from a myriad of problems, such as high fuel taxes and inadequate infrastructure. Air India, the country's flag carrier, unleashed a bruising price war last year, and India's 3 listed airlines, Jet Airways, SpiceJet and Kingfisher Airlines, have reported losses in their most recent results. So by contrast to the excitement around Chinese carriers and Southeast Asia's low-cost airlines, India is in danger of becoming the region's aviation basket case.